Hello. Been a while since I made a video, and not because I haven't wanted to, but I figured I would spend some time letting my new methodology kind of work or not work, and it seems like it's working, so it's something to watch. Um, so what I'm doing, and this is basically a sector ETF trend following strategy. What am I trading? I'm trading the 11 spider sector ETFs, trading two kind of emerging market ETFs, FXI, EEM, trading TLT, which is long dated US Treasuries, gold, oil, DBC, which is diversified basket of commodities, and the Bitcoin ETF. So kind of a heavy distribution toward commodities. I've got, DBC, USO, is gold a commodity? Not really. I've got XLE and the sector ETFs. Okay, so what is the method? What's the modification of the method? Um, so if one of the 18 stocks is above its 10-day moving average, I hold $3,000 worth of that stock in my $30,000 account. Um, so if if all 18 were above their 10-day moving average, it would be three times 18, whatever that's 54,000, I think. So I would have to use margin. So I do use margin. Typically, the margin kind of maxes out at about 2x leverage. Right now, I'm using $10,000 in margin on a $30,000 account. If one of the stocks falls below the 10-day moving average, then I trade what I call the 3-day price slope method. And all I'm doing is fitting a straight line to the past 3 days of closing price. And if the slope of that line is negative, it's a sell signal. If the slope of that line is positive, it's a buy signal. So really just kind of, if we're not above the 10-day moving average, we're trying to track short-term movements, looking to really catch turn. Sometimes the stock will turn around. It takes a couple of days before it passes the 10-day moving average. So that's why I do this 3-day price slope method. I can make my life simpler and just not hold the stock at all if it's not above the 10-day moving average. And maybe I'll do that. It might certainly I'd trade less if that happened. Um, so when I'm trading that 3-day price slope method, I reduce the base amount of stock to $1,500. So at that point, I would not be using margin if we were in that boat. Okay, so here's the performance. Um, we have about 2 months of performance on the modified method. Okay, so that black line, that vertical black line there, goes back to September 7th, I believe, which is the day I started trading the new method. So I normalized. I've got two comparison accounts. I compare it against a virtual SPY account and a virtual DIA, which is Dow Jones Industrial Average ETF. Okay, so on September 7th, all three accounts were had the same amount of money in them, about $30,500. So right around that day was the day that kind of a big drop started there until mid-November. The blue line is my portfolio. I've consistently stayed ahead of the SPY, so I'm outperforming the SPY, and really that's kind of the important one to compare against, because if you take the totality of all 11 sector ETFs, that really essentially mirrors the SPY quite accurately. Not market cap weighted, but there you go. What's been interesting in the last month or so has been the outperformance of the Dow Jones Industrial Average relative to the SPY. Kind of crazy. Real big rotation into large caps, dividend paying, reasonably priced large caps. But anyway, yeah. So I'm beating the SPY, which is great. One plot that I like to show here, it basically plots the three things. The blue curve is the SPY virtual account. The red curve is the 10-day moving average of that account, and then the yellow curve is the percent of that I'm in cash, and that's plotted on the right-hand axis. So as you kind of see, starting on September 7th, when I started trading the new method, um, we were in a downtrend at that point, and you can see how really for most of the downtrend, I was in cash, almost up to like 90% cash at some point, but usually over 50% cash. Right now, we're in kind of we've recently broken through the 10-day moving average to the upside, though the last couple of days have been testing that after the Fed announcement. You can see like during this time, on average, I'm carrying margin. So the horizontal cyan line shows if I'm in negative cash, it means I'm holding margin. So right now I'm probably got minus 25% of that V count is margin. So anyway, I usually make a script and kind of read it to make the videos flow. So apologies, I just kind of ramble and stumble through this video, but I hope you found it interesting. I think the method is working. Very simple trend following method, and kind of looking for sector rotations, which we see right now. Right now, we're absolutely having a sector rotation away from technology and into value, into commodities. And you see that, like right now, looking at this particular graph, the SPY is below its 10-day moving average, and yet of those sector ETFs, about half of them are above the 10-day moving average. So that's kind of what you want to see. The ones that are trending up, you want to be in those big. The ones that are trending down, you're out. So far it's working. If it keeps working, I'm going to keep making videos, and I think it's still going to take another couple of months before I have a clear indication of whether the method's working or not. But so far, so good. Post your comments, feedback in the comments section. Look forward to hearing from you. And until next time, bye.